Hello and welcome back to the channel. My name is Michael, your host here at MTT Finance. And if you're anything like me, when you went to school, you didn't really take any courses to help you navigate the financial world that you'd find yourself in once you've graduated either high school or college. And you may have been left up to your own devices to figure out how you are to financially survive in this world. Financial education is something that a lot of us lack, and it's a growing process for most of us as we make mistakes and then we learn later on that we're making mistakes that are ultimately either going to keep us living paycheck to paycheck or stop us entirely from reaching our financial goals. And so in today's video, I would like to go over 4 different money mistakes that a lot of us make that are ultimately either going to stop us from reaching our financial goals and becoming financially independent, or altogether keep us living paycheck to paycheck and just keep us poor. And I don't want you to think of this video as me just lecturing you on what you should do, as I myself have made all these mistakes myself. I'm still learning, and I'm simply just making this video to show what mistakes a lot of us are making and how we can grow and better ourselves so that we eliminate these habits, eliminate these mistakes, so that we can be better on track to reach our financial goals. Like always, be sure to hit that like and subscribe button if you haven't already, as that really helps my channel get out there so that more people can view my content and become more financially literate, seek ways to pay off debt more quickly, and become more financially independent. But let's get down to business and talk about mistake number 1 that a lot of people, including myself, have done when it comes to money and money management, and that is not paying yourself first when you receive your paycheck. Oftentimes when we get our paychecks, we seek to pay everyone else before we pay ourselves, meaning we'll go and pay the water company, or we'll go and pay the electrical company, or we'll go and pay Starbucks or Dunkin' Donuts, or we'll go and pay a restaurant that we want to eat at first before we pay ourselves. A good money habit to develop early on is before we go out and pay our bills or go to restaurants or buy things that we want, we first put money towards either our saving account, like an emergency fund, or towards investments. The reason why it's important to pay ourselves first is that if we neglect to do that first, we end up spending all our money on everything else, all our bills, all our expenses, all our wants within that month. And then when the end of the month comes, we usually typically have nothing left over either to put towards our investments or to save up for an emergency fund or for whatever we need it to. You see, there's a concept called Parkinson's Law, which states here that work expands so as to fill the time available for its completion. Basically what that means, if I could give you an example, if you've ever had to work on a paper in high school or in college and you were given a month to complete that, you'll find that the time you spent working on it during that month was pretty inefficient, meaning you might take a 20-minute session here to kind of look over some ideas for the paper, but during those 20 minutes you work on it, you might be browsing Facebook or looking at Instagram or just doing other stuff. You're not going to be efficient with your time over the course of that month because, hey, you have a whole month to get this paper done. However, let's switch this situation and say that instead of a month to have and complete this paper, you only have 3 hours to complete it and turn it in. You'll find yourself during those 3 hours being much more efficient with your time because the time you have allotted is much smaller. And so your work needs to be much more efficient during those 3 hours, and you're going to find that your brain is much more focused and that you'll inevitably use your time more efficiently. It's the same concept when it comes to paying your bills. I'm not saying by paying yourself first, you're supposed to then neglect your bills and other types of spending you need to do throughout the month. But instead, by paying yourself first and then using what's left over to pay your bills and expenses, you will find yourself being much more efficient with what you have left over. And therefore, you will be able to cover your bills because you realize that, hey, I'm putting this money towards me first, and then what I have left over, I'm going to use to pay my bills and other wants and needs in my life. When this happens, you will inevitably begin to cut out and slash unnecessary spendings in your life so that you can cover your bills and those basic necessities of life. However, by not developing this habit of paying yourself first, this will inevitably lead to living paycheck to paycheck, having no savings built up, having no money towards investments, and ultimately you will not be able to reach your financial goals and become financially independent. Money mistake number 2 that we can so easily fall into is using our cash to simply just keep up with friends and family. It can be so easily, especially in our day and age with the pressures of social media and needing to post things on Instagram or Facebook about what we're doing, to look at other people and how they're spending their money, such as going on vacations or eating at expensive fancy restaurants, and we feel that we need to post things like that too. We need to go spend our money like they do, and ultimately that is going to keep us poor and it is going to keep us from reaching our financial goals. Spending our money to keep up with our friends and family can be a habit that is tricky to beat, as a lot of times we might feel embarrassed or we don't want to talk about money to our friends and family, and so we would much rather just go along with them if they were to invite us to a restaurant that we can't afford or to take a vacation that we couldn't afford, because we don't really want to have that conversation about not being able to afford something right now because we're working on a financial goal. The best thing to do is just to sit down and talk with them about your financial goals and what you're working on right now and why you can't maybe necessarily go to this particular type of restaurant or take this type of vacation right now. If they truly are your friends and family, they're going to support you on your decision. They're going to want to see you succeed at your financial goals as well. And so it's best to just have that conversation with them rather than just sweeping it underneath the rug and going along with them and trying to keep up with the Joneses, so to speak, in terms of your spending. Money habit mistake number 3 is overutilizing your credit card simply just to gain cash back or get travel reward points. Now this one can be a little bit sticky, as you've probably already heard me talk on this channel about my credit card and why I was excited to get it because of the cashback bonuses it offers. However, the reason that credit card companies offer these bonuses and sign-on bonuses and cashback rewards is because they know that if they do, you are therefore going to either consciously or subconsciously use your credit card more often. It can actually be dangerous to fall into the mindset that the cashback or the rewards points justify your purchase. I have to be honest with you, this past month in December was the first month that I've really utilized a credit card for most of my spendings. And I found myself that if I was going to purchase something on Amazon, because I was using my credit card, which gives me a 5% cash back on purchases on Amazon, I was more likely to continue shopping after I've already added that item that I needed to my cart. I was more likely to continue looking for things that I may need or things that would just be nice to have in my house. And I was using the mindset that I'm gonna get cash back for it anyway, so why not buy it here, buy it now? But that can be so dangerous to fall into, because then I start spending money on things that I may not even need just so that I can get a couple cents or a couple bucks back at the end of the month. Ultimately, this habit will keep you poor and it will definitely keep you from reaching financial independence if you keep it up. So the best thing to do is just to correctly understand how to use a credit card. Credit cards are double-edged swords. You have to be able to know how to use them efficiently and responsibly. Once again, the best practice when it comes to using a credit card is to never purchase something with it that you can't right then and there, I mean within seconds of making that purchase, go ahead and pay off. And then the worst thing you can do is just to start making random purchases of things that you don't need simply because you're gonna get cash back or rewards for it. And then the fourth money habit mistake that we all make, especially if you're in my age range, you know, mid-20s, maybe even to later 30s and with this coming generation, and that is normalizing debt in your life. I don't know when this necessarily happened, but especially people in my generation who have gone to college and gotten a college degree and they come out with a ton of student loan debt, and then they might go out and buy a house and have a mortgage loan. They might buy a new car and have an auto loan they gotta pay off. They may even be using a credit card and start racking up credit card debt, which is the worst debt to have. And then what they do is they find themselves with all this debt and they think to themselves, well, everyone else has debt, so what's the big deal if I have it too? I can just make minimum payments on it and I'll be fine. But racking up and normalizing having this much debt can really be a detrimental killer to you reaching your financial goals and becoming financially independent. You see, this type of debt is a silent killer. It just kind of sits in the background. And because you can justify the fact that you might be able to make minimum payments on all these different things each month, you then justify the fact that you might be thousands, if not hundreds of thousands of dollars in debt. The way our system and the way these companies set up their debt repayment plans is in a way that you feel actually comfortable with owing them thousands upon thousands of dollars, because you know that you can make minimum payments on it each month. But a lot of times what you may not see happening is that because of the interest on these debts, you're actually paying them thousands of dollars more than you actually have borrowed to either pay for a car or pay for your house or pay for your student loans. And these companies love the fact that you forget that you're paying interest, and they'll just keep it so that you're making these minimum payments, because ultimately in the end, they know that they're going to be grabbing more money from your wallet than you took from theirs. And so this idea of normalizing debt just because everyone else has it can be very detrimental to our finances and meeting our financial goals, and can definitely keep us poor. The best thing to do if you have debt is not to think of it as just something that's normal, that's something that everyone else has, but is to seek ways in your budget that you can begin paying extra on those debt accounts each month or each week or however you set it up, so that you can get rid of having debt as quickly as possible. By getting rid of debt quickly, you ultimately ensure that you're paying less interest towards the companies you borrowed from, which in turn means that you're paying more closely to the amount that you borrowed. There are definitely way more than just these 4 self-sabotaging money habits that people have. In fact, if you want to, in the comments, you can actually maybe leave a comment onto what you think are some other poor money habits that people have, including maybe some that you have struggled with in your past. But the best way to kick a bad habit is to first acknowledge that you have it, and then to seek ways and seek help on how you can conquer that poor habit so that you're not letting your money go towards things that it really shouldn't be. The more poor spending habits you eliminate, the quicker and more easily it will be for you to get towards your financial goals and ultimately become financially independent. But anyway, I just want to wrap this video up by saying I hope you found some value out of this content, that you can maybe look at your own spending habits and see ways that maybe you're doing one of these 4 things that I've talked about, and then looking for ways that you can eliminate and start going the other direction, and that way you can reach your financial goals much quicker. I hope you have a wonderful rest of your day, and that we head into 2021 with better spending habits, better money habits for this new year, and that way in this coming year we can start reaching more of our financial goals. Thank you so much for watching, and I will see you all in the next video. Take care.